Good morning, good afternoon, good evening from wherever you're watching from. Welcome back to our channel, everybody. Today, we'll be looking at how to make $500 a day trading Forex, indices, metals, or stocks. To make $500 a day trading Forex or indices or any of these assets, first, you need a very good strategy. You need a very good strategy to become a profitable trader. The second thing you need is enough sample setup. You need a lot of setup to be able to gather within a month. The third thing you need to consider is your capital. So, good strategy, trade setups, and your capital. These are the factors we are going to consider in this particular video. There are three types of traders. We have a trader A here. Let me call the trader A John, okay? We have John who wants to get rich very quick. So John has $100 in his account and he wants to turn this $100 into $20,000 or $2,000 or $5,000, okay, as he sees on YouTube. So he decided to believe those YouTube guys those who are taking $80,000 to $20,000, those who are taking $80,000 to $5,000. So he believed that that's what he thinks trading is, and then he takes his $100, he puts it in his trading account, and he wants to take it to the same level. He wants to take it to $50,000. He wants to take it to $5,000. He wants to even take it from $100 to $1,000 within the same day. Okay, this is one trader A called John. So what does he do? He decided to take huge positions. So he has $100. He decided to either trade the whole $100 or break the $100 into two. Take $50 risk and take another $50 risk, and then he will lose the money. After he loses the money, what will he do? He will take another $100 from his account, deposit it into his trading account, and do the same thing and lose it again. Keep taking the money from his account and then do the same thing and lose it again. He keeps depositing $200 and lose it again. He deposits $300 and lose it again, and go back to $100 and lose again, because he is using the same strategy. He still thinks that he can still use the $100 to get $50,000, or he can use the $100 to get $2,000, or he can use the $100 to get $5,000. Guys, it's very ridiculous. I may be laughing. So he keeps repeating this process until he gets mad. This guy actually is going to get mad. Okay, this is one type of trader. And you have trader B. Let's go to the B, Kelvin. Okay, so we have John and we have Kelvin. So trader B, who is Kelvin? Kelvin has maybe $200 in his account, but because he wants to get rich very quick, what does he do? He goes to his family and friends and borrow huge money. So he borrows $2,000, add it. He borrows $5,000, he borrows $10,000, and tell all his family that he's going to be very rich very soon. He's going to pay them back very soon. He deposits all this money in his account. So in total, maybe he can get like $10,000, $20,000, or $50,000. Deposit all this money from his family members in his account. Meanwhile, he himself, he has not even gotten there. He doesn't even have $10,000 in his account. He doesn't have $20,000 in his account, but he has borrowed this huge money from his family and friends, lied to them, telling them that he's going to be very profitable soon, and then he has more aspirations. He's going to pay them back very soon with huge profits, with huge interest. So he takes this money from his family and friends, deposits it in his trading account. Because he has no knowledge of what he's doing, he takes huge position, he keeps buying and keeps selling, and he's a very good contributor to the stock market. He deposits his money into the stock market so that those who are able to be patient and learn will take his money. That's it, guys. Trading the stock market, foreign market, or indices is a zero-sum game. When you're losing, somebody is also gaining. So trader B, who is Kelvin, he deposits his money into his trading account. He has no knowledge. He takes huge position. He buys 5.0, 10, like he buys a very huge lot size, and then within 1 week, all the account is blown. $50,000 account is blown because he has no idea of what he's doing, and now he starts getting mad. Or if he doesn't get mad, he starts hiding from his families and friends because now he has no idea how to pay them back. He brought all this money from them in order to make a little money and more money out of it so that he can pay them more, and now he blew the whole account because he has no idea of what he's doing. These are the two categories most of the traders find themselves into. Okay, I don't want you to find yourself into any of these categories. Don't be trader A who just have $100 account or $200 account and keep depositing $100, $200, and keep blowing it because he thinks he can take it to $50,000 or $5,000 as he sees on YouTube. And don't be trader B who has no money but still go and borrow huge money from his families and friends, deposit it into the account, hoping that he's going to make money. Guys, this is insane. You shouldn't be doing that. Okay, I don't want you to be trader A or trader B. I don't want you to be John or maybe Kelvin. Okay, but I want you to be a trader who knows what he's doing, who can make a little money out of the little money, the little account he has, who can make a little money out of the little capital he has in his trading account. To make $500 as a day trader, you must have a very good strategy, very good knowledge and skills on how to analyze the market. And the strategy can be anything, okay? It can be any strategy you've learned from anywhere that you have mastered. Guys, listen, a strategy you have mastered. Because you can learn a strategy but not mastering it. If you don't master anything, then you cannot get any profit from anything. In any industry, either you are a doctor or a lawyer or accountant or a businessman, if you have not mastered any skill, you can't make profit. If you are a novice or an average businessman or an average trader, then you cannot make enough profit, okay? But if you master that particular strategy, if you master that particular setup, then you become a master of that particular setup and you start getting money out of the setup. So it can be any trading strategy that you've learned from anywhere or you've learned from my channel that you've learned, practiced, and mastered it. Okay, you must have good skills on how to analyze the market and have a very good strategy. That's the first thing. But in this video, I'm going to use my breakout continuing trading strategy to teach you how to make $500 a day from the market. Okay, breakout continuing trading strategy. I've already taught this strategy, but I'm going to use this particular strategy to explain how you can make $500 a day in the market. To trade this strategy, first you must identify a trending market. What is a trending market? A trending market is a market defined by what? Higher highs, and higher lows, right? We all know that. Anybody who knows how to trade knows this. We must identify a trending market. And what is a trend market? A trending market is a market defined by what? Higher highs and higher lows, right? You can see the market is trending. Higher highs and higher lows, right? That is a trending market. The same way on a downtrend, we have lower highs and lower lows, right? The market will be trending down. So you must first identify a trending market. The second you have to check is to make sure that the moving averages are in sequence. Okay, the moving averages are in sequence. And which moving average are you supposed to plot? You can plot your 200 moving average. You can plot your 50 moving average. If you like, you can add your 100 moving average here, or you can have your 20 moving average. So these are the moving averages I use: 50, 200, and 100. 50, 200, 100, and 20 moving average. Okay, so what do you have to look for? You look for a trending market. Make sure that the moving averages are in sequence. If the market is on an uptrend, the moving averages must be in sequence. The smaller one must be at the top. If the market is on a downtrend, then it should be the opposite. Okay, so search for a trending market. The next thing you have to look for is to search for consolidated area, because we know market moves uptrend, retrace, uptrend, retrace, and uptrend, right? I've also taught you that market can also move like this: uptrend, retrace, uptrend, consolidate, and breakout. Can you see? So it can either be this method or this method, and this is what I'm teaching you. So I'm teaching you this method. You have to wait for a consolidated area to form, and when the market breaks out of the consolidated area, when the market reverses back, it retests and gives you a confirmation pattern. We take the market up. Okay, we take the market up. So on this particular chart, we can see that the market was trending. Can you see? Up move and then consolidated. Can you see? So we waited for the market to break out of the consolidation, and the market comes back and give us a bullish engulfing pattern or any buying pattern. Then we enter the trade. So on this particular chart, we can see that when the market broke out, it came back and gave us a bullish engulfing pattern. Can you see the morning star pattern, guys? It gave us a morning star pattern, and then we enter our trade here. So you enter your trade here, and you put your stop loss below a structure, and you take your profit target 1:2. Always take profit of what? 1:2. Profit target of 1:2. So let's assume that if you are risking $100, you must always take $200. Okay, if you are risking $50, you must always take $100. But in this particular scenario, we are going to risk $250 to make $500, because we want to make $500 a day, right? So you risk $250 to make $500. So the strategy, you must first get the strategy in your mind. The strategy is what? Breakout continuing trading strategy. What you have to find: identify a trending market. The market should be trending. What else again is the next one? The next one is what? Identify consolidated area. When there's a breakout from the consolidated area, when the market reverses back to the consolidated area, we look for confirmation pattern, and then we join the trend up. We take your stop loss, we take your profit 1:2. Let's look at another example of this same strategy. So this is another example of this same strategy. What are you looking for? You're looking for what? A trending market, right? A trending market. And the time frame can be M15, can be H1, okay? I don't prefer M5 for this particular strategy because M5 trends are not that reliable. I'm not really fan of M5. I use M5 to trade different strategy, okay? So you have to trade on M15 or H1, or if you have patience, you can trade H4. But here we are using M15 or H1 to make our analysis, okay? So the strategy, what are the rules? The rules is what? First, we must find a trending market. So is this market trending? Can you tell me, guys? Is this market trending? Yes, the market is trending. The next thing you have to look for is what? Make sure the moving averages are all in sequence. So moving averages are in sequence. So we have our 50, this is our 200, okay? It's hidden here. This is our 200 moving average. This is our 50 moving average. And this is our 20 moving average. Guys, it's very difficult to write with the mouse, okay? This is a 200 moving average. So this is our 20 moving average, this is our 50 moving average, and this is our 20 moving average. Okay. So 1, the market should be trending. 2, the moving averages must be in sequence. Okay. 3, what do you look for? You look for consolidated areas on the chart. So assuming this side was not there, guys, don't look here. Assuming this side of the chart was not there, we are focusing here. You saw the market trending at this moment. So look for consolidated areas. So you see support, and when there's a breakout from the support zone, what do? We wait for the market to be traced back to the support zone and give us a bullish engulfing pattern or bearish engulfing pattern. So here, as we can see, let me clean this, guys. Here, as we can see that the market broke this zone, came back to the zone. See, it came back to retest, gave us what? Bearish engulfing pattern. Guys, can you see? Give us bearish engulfing pattern. So you enter your trade here, you put your stop loss behind this pattern, and then you take your stop, you take your profit. 1:2. Always 1:2 is the must. Okay, 1:2 is the must. Don't take something less. If you take something less, you find it very hard to become profitable. So in this particular scenario that you want to make $500 a day, you must risk $250 to make $500. Okay, so any trade you're going to take, you risk $250 to make $500. So identify the pattern, you wait for a breakout, and when the market retraces and retest and give you a confirmation candle, you enter the market and you take the market down. This is the downside of the particular strategy. But guys, if you have been my student for some time, aside the breakout continuing strategy that we have found here, that we got the entry here, we can also see something else, guys. We can also see something else. Can you see? Who can tell me? Yes, aside this pattern, what else can we find? Guys, if you have been my student for some time, you can also identify one more pattern. You who can tell me, guys? Who can tell me? The Z pattern. See, 1, 2, 3. When this high is taken and the market retraces back to the Z pattern, we take our trade. So you should have entered here. Here is what? A bearish shadow. You entered here, you put your stop loss behind, and then you take a profit somewhere reasonable. This market would have gone down. Okay, this I took the screenshot just to show you guys, but this market could have just gone down. So the bearish shadow is there. You enter your trade here, you put your stop loss behind the structure, and you take your profit to 1:2. So you raise $250 to make what? $500. So you see, on one chart, you can even find 2 setups on one chart. Guys, can you see? You can find 2 setups on one chart. Very easy and very simple. But if you don't have a good strategy, you don't know what you're looking for, then definitely you are not going to have any winning streaks, any winning trade, because you don't know what you're searching for. So when you open the chart, you don't know at a point where you're supposed to buy or where you're supposed to sell. You don't know. Okay. But if you know what you're looking for, if you know what you're actually looking for on the chart, then it's very easy for you to spot a trade and become profitable. So this strategy can be traded on Forex and maybe on metals. Okay, I prefer all the Forex pairs, and Forex pairs can trade on M15 or what? H4 time frame. M15, H1, and H4 time frame. Okay, M5 is a little faster, so I prefer you have your patience to wait for M15 or H1 candles to form, and then you set for these patterns and you take the trade using all the Forex pairs. Okay, but before that, check the currency strength meter. Check Forex Factory. I don't want to repeat Forex Factory again. Almost all my videos I'm repeating Forex Factory, because guys, I want people to go there and check for any news updates. Okay, forexfactory.com to check for any news update. If you see red news, do not trade. If you see red news within the day, don't trade. Don't take any trade within that particular moment. After forexfactory.com, check your currency strength meter to see that if the currency that you are trading is stronger, we merge the strongest currency with the weakest currency. If you do that, then it gives you more odd on your favor. Okay, it gives you more higher probability in your favor, and you're going to have a lot of winning streaks. So there is one more example, and as you can see, we are on AUD USD. Can you see? Pre time frame, M15 time frame. You can also trade it on H1 or H4. Okay, and what do you look for? Look for a trending market. As you can see, the moving averages are all in sequence. Can you see? So which means the market is trending down. Can you see, guys? Good. Now what do you look for? Look for what? Yes, guys, can you tell me? Look for what? Look for consolidated areas. Now the market has already played, so it's very easy for you to spot. But assuming we are starting from here, Okay, forget about this side. Assume you're starting from here. What can you find? You can find what? Support areas here, right? Support, 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 and there was a breakout. And when there was a breakout, was there any confirmation after the market reversed here? No, there was not any confirmation here, but the market made a confirmation candle here. Can you see bearish pattern? So you enter your trade here, you put your stop loss behind this pattern. You enter your trade here, stop loss behind the pattern, and then take profit 1:2. So you take your profit somewhere here. Enter your trade here, stop loss and profit target 1:2, and you're out of the market. That's the first trade you could have gotten on this chart. Assuming you were able to wait for another moment, you're able to wait for some time, then you would have also gotten another trade here. Can you see? Breakout. You can see support, 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 and there was a breakout. Guys, can you see? Support, 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 and there was a breakout. So when there's a breakout, what do you look for? You look for the market to retrace back to a very important zone. So where did the market retrace up to? Oh, here, do you have a confirmation candle here? Yes. Can you see? Guys, can you see the bearish engulfing pattern? Bearish engulfing pattern. Can you see the evening star? So what do? You enter your trade here. You put your stop loss. You enter your trade here. You put your stop loss behind a very good structure or very reasonable stop loss. You take a profit 1:2. Assuming that you do not see this particular pattern, okay, so you were late, you couldn't figure this particular pattern out, they could have also entered here. See, the market played, but still when it came back, it gave you what? It gave you the same pattern here. Guys, are you watching? So you enter your trade here, your stop loss behind the structure, and you take your profit 1:2. Profit 1:2 somewhere here, and then you are out of the market. Always take 1:2. So what are we taking? If you want to make $500 a day, what do? You risk $250 to make what? To make $500. So your risk to be $250 and your profit target to be what? $500. Always 1:2 is a must, guys. 1:2 is a must. You have to be patient. Be patient for this same setup to be traded every day. So another question is, how much capital do you need to trade so that you can risk $250 or to make $500? How much capital do you need to trade? Okay, we've learned about the skills you need to require, right? You need to identify this particular pattern and the strategy stuff that you've learned right now. So how much capital are you going to require? With that, let's go back to the black screen. Okay, I like the black screen a lot because it doesn't chip my eyes. The light doesn't emit to my eyes. I just like the black screen. So let's go back to the black screen. Let me explain to you. So guys, if you want to risk $250 of your account, then you must have a minimum of what? Minimum of 5,000 or 6,000 in your account before you can risk $250 in your account. Because ideally, you are supposed to risk 1, 2, or 3% of your account. But sometimes if your account is small, 50,000 or below, 5,000 or below, then you cannot just risk 1% because your earnings will be very small. So you need a minimum of 5,000 in your account so that at least you can risk 5% of the 5,000. Okay, 5% of the 5,000. So your goal is to take about 20 to 30 trades, and let's assume that in a week you are in a month you are able to take 30 trades, and 15 of them are losses, 15 of them are wins. You're definitely going to be profitable, right? So let's say that you take the trades, 30 trades, and 15 of them are losses. So 15 times 250, you're going to get what? You're going to get 3,750 losses, right? The same way, 15 times the $500 you're going to make $7,500. So net, when you deduct the negative from the positive, you're going to make a profit of what? 3,700 profit at the end of the month, guys. What if maybe the month is a very good month? Okay, it's a very good month. You have become good, so you're able to take more winnings. So you get, out of the 30 trades, you get 10 to be losses and 20 of them to be wins. So what are you going to do? You say 10 times 250, which will give you 2,500. You get 20 times 500, which will give you $10,000. When you take 2,500 from $10,000, you are going to get 7,500 as your profit at the end of the month, which means that month you are very profitable because you got more of them to be wins. Okay. What if the month is a very bad month, or you are very good, you are in a very bad situation and you can't trade well? So let's assume that 20 of your trades are losses and only 10 are wins at the end of the month. Okay, so 20 times 250, and then we have what? 20 times 250 will give you 5,000, and you have 10 times 500 will give you 5,000. So net you still break even, right? Which means if you're a good trader, it's harder for you to lose. If you don't make anything, you're definitely going to break even. So a month where the month is average, you can make 50% win rate, which means half of your trades will be wins and half of your trade will be lost. So net with one to two risk reward, definitely are going to become profitable. If the month is very good, or you're very good and you make more wins than losses, then you make a very good profit, guys. So trading is very simple. Okay, so before you can trade with $250 as a risk, you must have what? Minimum of $5,000 in your account, or minimum of $6,000 in your account. Don't be like the guy who wants to take 250 or he has $100 in the account. He wants to take it to 2,000. Okay, don't be like John. John wants to take $250 to $50,000 as he has been seen on YouTube, guys. It is not real. Don't follow those guys. I've been telling you. Don't follow those guys. They just use fake profit to show you. That's not how trading is done. Okay, trading is done. You gather enough sample of trades within the month, and then when you put them together at the end of the month, net, that thing loses from losses and loses from wins. Then you become profitable. That is how we trade as a trader. Okay, so don't rush to take $100 to $50,000 or something. Anytime you see somebody saying I'm taking $80 to $2,000, $100 to $2,000, $100 to $5,000, $100 to $100 million, guys, the person is lying. The person is telling you lies. You shouldn't believe that guy. That's how trading is done. You are not a gambler, okay? You're not a gambler. Those people, they just open demo account, leave the account to run for some time over 2 days, and when they get those wins, they close all the losses and show you only the profit. Like, guys, see, I used $80 or I used $100 to get $20,000, guys, and you follow this guy. Do you want to become a day trader or you want to become a gambler? If you want to quit your job to become a day trader, then follow specific rules that will make you money as a day trader. Okay, that will make you money to take care of yourself and your family, and eventually you become rich one day. Do you understand, guys? Become rich one day. So that's how we do the trading. You take about 20 to 30 trades within a month, and when you have losses and you have winnings, taking the losses from the wins, you definitely become profitable trader at the end of the month if you know what you're doing. So in summary, to become a profitable trader, to make $500 a day, okay, a day, one, you must have what? A very good knowledge and skills how to analyze the market. Two, you must have a very good strategy. And three, you must have good capital so that you do not over leverage. Okay, you do not over leverage. Me as a professional trader, I've been trading for some time. Because my account is huge, I risk just 1% or 2% of my account. Okay, and you guys will not understand because you are beginner traders and you don't understand why we should risk 1%. When I was a new trader, I found it difficult to accept this fact. Okay, I said, my account is very huge, why should I risk 1%? It's because something losing streaks. Okay, because something losing streak. If you hit losing streak where you are in a bad month where you are losing, if you are risking 10% of your account, you have 10 losing streaks and you're out of the market, your game is over. Okay, your game is over. But if you are risking 1% or 2% and you have about 10 losing streaks, guys, you are still in the game. That's why you risk 1%. But you as a beginner, your capital is not as huge as we do. So you have maybe $5,000 in your account, $6,000, or let's say you even have $1,000. Which means if you have $1,000, you cannot make $500 in a day, guys. You can't do that. If you have $1,000, then you must target maybe making $50 in a day. Okay, $50 in a day. Don't be rushing, guys. Don't be rushing. Take your time and trade as a professional trader. Okay, so you need a very good knowledge and skills. You need very good strategy, and you need enough sample trade. You must gather enough sample trade to be able to become profitable, to make $500 a day, and then you live on that. So that will be all for this video. This is Seth Owens, your trainer for this entire series. Don't forget to like, share, and subscribe to the channel, and hope you return next time. Bye.